Stock Market Investing for Beginners. Golden Steps to learn how you can create financial freedom through stock investing with proven trading techniques and strategies. Written by Warren Robbins and Tony Day Buffett. Narrated by Bruce Enrietto. Chapter 1. Basic Stocks. Stocks. Trading in stocks and bonds or securities are what the stock market is all about. The exchange is the meeting point of supply and demand, which is the basis of the market price of the securities traded. Its role is to provide the conditions for equality of participants in trading. If you choose to buy stocks, it is necessary to go through a broker-dealer, a member of the BSE. The broker knows all of the procedures of trading and mutual rights and obligations. You need to open an individual account with a bank that is a member of the Central Securities Depository in order for money to be transferred from buyer to seller upon the completion of a trade. The basic rule for trading is that you should never invest more than you can afford to lose. There are two basic types of shares: ordinary, standard, and preferred, preference. The main difference between them is in part related to rights management, which is subject to specific legal requirements. A stock represents ownership of a portion of capital, assets of a company. Each shareholder of the company, in fact, is part owner of the company, in proportion to the number of shares held. Successful share trading is understanding the difference between the par value, book value, and market value of the shares. The nominal value of the shares is the amount you receive in dividends. The book value of shares represents the ratio of the book value of equity and the total number of issued shares, and changes depending on changes in the amount of capital. The market value of shares is changed independently of the nominal value and the book value and represents the conditions of supply and demand at a given time in the market. The market value of stocks is the basis for all shareholders' trading decisions. Criteria for trading depends on several factors. First and foremost, the size of the company. Most investors are invested in the already well-known and established companies. Investing in them offers some security, with big dividends. If you buy shares of these companies when they are cheap, it is very likely that you will make a profit. Smaller companies represent a higher risk, but their potential for growth is greater. The second criterion is the grouping of companies across sectors. Different companies engaged in the same business have a lot in common. On the London Stock Exchange, companies are divided into 35 specific areas who are always in and out of fashion. If investors estimate at some point that oil companies' stocks are relatively cheap and that shortly oil prices will jump, oil companies become attractive for investment and the price action of all companies in the oil sector will grow. The domino effect applies to all industries and can have a significant impact on stock trading. Dividends will get you a benefit that, with a timely sale of shares, will increase your capital exponentially. If you reinvest all the money you earn back into stocks, and they continue making their dividends or growth, the more time passes, the earnings will be higher. And as long as you invest the profits that they earn, you will receive a more significant amount of money. Smart investing in the stock market brings profit. Investing in the stock market can be accepted as one of the ways to spend money that you want to save. You need to have enough time and patience to receive the maximum payout. Large profits don't happen all the time, so smart investing is the key to success. The more you are willing to risk, profit will be higher. Finding a good broker is essential. You can explain to the broker what risks you're willing to take. You have to decide how much money you want to invest. Stock trading should not be gambling. Success in this business as a sole trader depends on knowledge and experience. Luck doesn't play a role. To be a successful stock trader, you need to open an account, and you can begin training. You can test yourself by mock buying and selling stocks and investment strategies and thus gain a great deal of experience trading. The stock market is traded based on the
Sample complete. Ready to continue?